What's up, nerds? Happy Chiefs Day. Big game versus the Bills today. I'm trying to get a couple stock videos in before the game. I have a video today on one of my favorite stocks. It's called POAI, or Precision Oncology. So let's get into it right away. So this is a company I've had my eye on for about a year. I actually bought a little last year and sold in December for a little tax break, and picked it up recently, around 90 cents or so. You can tell this company's dirt cheap. The company's only worth about $33 million, and it's had some pretty bullish behavior with the buying lately, and so I wanted to talk about that and also talk about the company a little bit. So this is a company with a very high amount of intellectual property patents, um, and they own a lot of uh, cancer cell lines. Uh, so the first time I ever looked at this site, I was like, "What? The largest tumor inventory in the world?" They own over 150,000 uh, different different tumor cell lines, and they also own some sort of artificial intelligence algorithm. I'd be lying to you if I said I fully understood it, but what they're doing is testing drugs against these tumor cells, which all have unique genetics, and using the artificial intelligence algorithm to uh, predict what sort of cancer cell lines might respond to what sort of treatment. And the hope is that this kind of uh, this kind of information will allow patients and providers eventually down the road to develop extremely personalized therapy for their cancer. So people talk about the cure for cancer, or quote, the cure for cancer, end quote. Cancer is it's a disease of the DNA. And every single type of cancer has different mutations, different chromosomal abnormalities, and behaves completely different. And each cancer is actually extremely unique in the combination of DNA mutations that are present. So there isn't really a cure for quote cancer, broadly, but uh, the key to understanding cancer and being able to treat cancer is to understand the genetic aberrations of the tumor, and then to apply some sort of therapy to which that specific cancer cell line is sensitive to. So, I mean, this is big stuff. So this is Helomics, which is just one of the subsidiaries of this company. Let's see if I can upload this website from its homepage again. You could see all the different. They have 5 subsidiary companies in this company, tons of patents. So we refer to this as intellectual property. They own patents. They own product. They're not selling this at Walmart. It's extremely difficult to put a value on something like this. Other big companies, they might sell at a market cap that's 3 times their revenue, or 5 times their revenue, 4 times their revenue. There's metrics for valuing bigger companies with proven business models. We're talking about a company that has extremely valuable, in my opinion, intellectual property. To see that this company is worth $32 million to me it's just hilarious. Yeah, as an oncologist, understanding the potential value of this property as it pertains to patient care and treating cancer. Uh, it's just like, why is the market sitting there with this value on this company? And a lot of it has to do with shorting. Again, And a lot of people shorting the stock are actually people with warrants to buy the stock at a higher price, hedge funds. Um, and also just a lack of understanding of the property, I think, is a big deal. Um, another another issue is that this company market cap is below the minimum price, or when it was trading under $1, it's below the minimum price to be in a lot of indexes, from some of these more conservative uh, companies. Again, I always use Edward Jones as an example. They're not paying any attention to the stock. And that's an advantage to you. And as the company slowly grows, now that it's comfortably over $1, my expectation is we'll see this price grow faster. And you just see, once these companies get comfortably over $1 and their prices kind of stabilize, a lot of times you'll see kind of more explosive growth. Another thing about the behavior of the stock that really caught my eye last week is that on the 19th, there was an announcement of an offering in the morning. So you can see 2 times in the past week, on the 19th and the 21st, they announced an offering. So remember, this is dilution. This $3 million offering happened, and then on Friday, another on Tuesday, a $2 million offering, and then on Friday, a $4.1 million offering. And I can tell you this $4.1 million offering, I did the math, it was a 12% dilution in shareholder value. And that was this. So you see this immediate sell off in the price from 135 to a low of 118. I know a lot of people that bought there. And then just look, the stock gets bought up very quickly. So to see 2 or 3 small dilution events, in a month, and this chart, tells me that, something's going on. The market makers, the hedge funds, the people that are setting the market for this stock, those dilution events they saw as opportunity to get in. They believe that the short and intermediate trend of this stock is upward. They don't care about a 12% or a 10% or 15% dilution, because, and as you can see, from 93 cents a week ago to 137, and that's despite dilution events. So I haven't seen a stock recently that behaved this way. Usually when there's a dilution event, there's poor sentiment around the stock. There's a lot of selling. It may make a big decline in the stock price, and the stock may be down in the dumps for a while after dilution. But I mean, to see 2 and 3 dilutions in a month and this chart continues to rise tells me that the sentiment around this stock is really good. And I am halfway expecting this stock to go to $2, $3, $4 next week. Maybe that's me being too optimistic, but I think something in the short term, at least that's my theory, is good around this stock, and maybe we'll see it take off. I'm always hesitant to recommend that people buy something I own when I've bought it at less. So I bought this stock around 90 cents. You can see it's 136. So I always feel like there's less risk for people that I'm trying to help if I say, I bought this stock at $1.40. It's 80 cents now, and I'm buying more. So, this would be a great time for you to get in. I really like that strategy, and I follow so many stocks, it's usually easy to find something like that. So this is one that is above my cost average, but it's hard for me to not think that this is a good entry point. Definitely one to keep on your watch list. I wanted to get this video out before next week so you can watch it. And, if you see another opportunity with a steep drop like this in a short period of time, or you just want to get on and try and ride the wave, which, the way this stock's behaving the last week or so, I don't think there's that much risk, because if you were stuck with the stock in your hand for a year or 2 years or 3 years, this number is so low. After showing you all the property that this company owns, and the value that has to the cancer field. It's so easy for me to see that what this company owns being worth $1 billion to a big pharma company that wants to buy, their property. Yeah, if this precision medicine program were to become integrated in patient care, what's the value of that uh, in patient care? It's just huge. I can't really even put a number on it, but it's easy for me to see that 32 million is a funny number and easily seeing potential of $1 billion. So this is something I hold a lot of. One of my favorites. I wouldn't consider selling it, at least in my position, at less than $4, and see potential for even $40. I just think it's an awesome company with a ton of property that's extremely undervalued, and might be an opportune time to get in.